Anthony Grasso here, bringing you financial news that you can use. This video, I'm going to go over a recent CNBC article that states we're currently in a housing recession at the moment. And then I'll give you your end of day stock market update. So let's get right into it. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell for your daily stock reviews, recommendations, and daily stock market updates from an unbiased approach. All right. So this video is brought to you by Webull, of course. It's an online trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. Now, if you sign up today and deposit any amount, you can get up to 2 free stocks by using my referral link in the description down below. All right, so let's go over that article real quick from CNBC. So they state we're in a housing recession, according to this article, and they state specifically that sales of existing homes were down last month 20.2% to 4.8 million properties from 6 million properties just a year ago. Now, however, they did state, though, that the median price last month was $403,000, which was up from 10.8% from July 2021, and homes are still selling quickly. Now, there are implications for buyers and sellers who may already be seeing shifts in their local market. And I just want to have everybody remember that real estate is a local market. What's happening in one part of the country doesn't mean it's happening over here in Florida. And just months ago, the housing market demand remained in overdrive. Surging home prices, historically low interest rates, and unrelenting demand. However, the data in this article suggests that some experts in the market were in a housing recession. For example, they state that sales of existing homes in July fell by 5.9% from June, marking the 6th straight month of a decline, and a drop of more than 20% from a year earlier. What's more is there have been layoffs and slower job growth in the industry. Home builder sentiment has turned negative, and buyers are canceling contracts in the face of interest rate hikes that have jumped from 5.72% from below 3.3% heading into 2022. Now, Lawrence Young, a chief economist of the National Association of Realtors, said in a statement, we're witnessing a housing recession in terms of declining home sales and home building. At this point, however, it's a different story for home owners, buyers, and sellers. So Young added that we're not in a recession for home prices just yet. Inventory remains tight and prices continually to rise nationally, with nearly 40% of homes still commanding the full list price. Do you hear that? We're still home sellers are still getting full list price. The demand has dropped, but the supply hasn't increased drastically enough yet for that imbalance. There are signs that the market is starting to shift in buyers' favors, though. Homeowners are in a very comfortable position. Prices are still rising nearly all markets across the country, and inventory is improving slightly, but not so greatly, Young told CNBC in this article. He said that homeowners are in a very comfortable position financially in terms of their housing wealth. He also recently said homeowners are absolutely not in a recession. Now, sales of existing homes were down in July by 20.2% to 4.8 million properties from 6 million a year earlier, according to the National Association of Realtors. However, the median price for last month was $403,000, up 10.8% from July 2021. Now, with interest rates roughly double where they were 6 months ago, buyers are having even more trouble qualifying for loans or affording higher rates. Now, Al Bingman said, a mortgage loan officer at Momentum Loans in Sandy, Utah, said in this article, I am seeing home buyers cancel a contract if their payment is just a little bit higher than what they expected. And this guy was talking about $100, just $100 more in your payment. People are like, nah, forget it. I'm staying. I'm not buying. Home buyers are definitely very cautious right now. Now, for buyers on this one hand, the slowdown demand is generally good news, the experts in this article state. Now, buyers should expect a little better price negotiation possibility. Young said last year they were at the mercy of whatever the sellers were asking, and there were multiple offers. Buyers may not face that now. Now, while it depends on the specific market, like I said earlier, there's more of a chance that buyers will see normal buying experiences going into the future. Now, in some places, the slowdown means less competition and more likelihood that sellers will accept offers that come with some contingencies, like appraisal contingency or inspection contingency, like they were just cutting like crazy last year. So they're seeing contingencies be accepted that wasn't happening before in the past year. All right, so this is definitely good news. My prediction on this, give it a few more months and we're going to turn to a buyer's market. It's just a few months more away, or up to 6 months, where that supply is just going to keep rising, slowly rising. And with the demand being lower, it's just more houses are continually staying on market. So we'll see. All right, so let's go over our daily stock market updates. Now, the stock futures are flat right now, trading Tuesday as investors await more guidance from the Federal Reserve Chairman Jerome Powell on the central bank's tightening. That's going to happen on Friday. And the futures on the Dow Jones Industry have dipped about just 15 points so far. And the S&P 500 futures and the NASDAQ 100 futures were both little change. Both the Dow and S&P 500 declined for the third straight session today amid relatively thin trading volumes. The tech-heavy NASDAQ composite finished Tuesday little changed as well. The S&P 500 is about flat of the month after rallying more than 9% back in July. Now, this 3-day Jackson Hole Economic Symposium, it starts Thursday with the Powell slated to speak Friday morning. Now, Fed watchers expect him to reinforce the central bank's goal of squashing inflation and keeping expectations about future price gains in check. Now, financial markets remain in choppy waters until the Fed Chairman Jerome Powell's speech on Friday, said Edward Moya, senior market analyst at Oanda. He may struggle to convince markets that he's comfortable with tightening policy and triggering a recession. The economy is clearly slowing, but it is too early for the Fed to signal that there will be less aggressive with the tightening policy. Investors will also monitor incoming data to gauge the health of the economy. Okay, so tomorrow, you got to look for the durable goods and the pending home sales are on deck for tomorrow. So we got this news today that we're in a housing recession, which isn't good. The Dow is flat. Everybody's just like, they're getting margaritas right now ready, not actually hitting the trading button. So we'll see what happens this week. I don't think it's going to be good. I think as soon as the chairman does like a 75 basis points, we might have another rally in a couple of weeks, but it's going to be a bear. I think we're going a little bit farther than we are today. But what are your thoughts? Leave your comments down in the description down descriptions down below. All right, so there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and cryptocurrency reviews and recommendations on a daily basis. So this is just your daily high-level outlook, but during the day, I go over specific stocks of the day that I could find, and then I can review them on a very in-depth analysis. Until the next stock update video later today, folks, ciao.